Yo, yo, yo. What's good, Mantis? Is there an option on there now to like join a private chat or like a membership? What's going on, Ross? How are you? I got you. I saw you in the chat. You're trading a little bit. Okay. That's alright. I'm actually okay with that. I thought I created some type of membership, and honestly I may just keep it open. I don't really care too much as far as the chat. If you guys could like the video, I'd appreciate it. I mean, I don't expect a whole bunch of people on this. Yeah, I got you. Let me transition over here. Oh, I got you. Let me know about the camera angle if it's, I think it's a little bit better. I think it's better than being up there. Excuse me. Let's see here. Might have to this. Alright, so this is going to be the weekly forecast, so I'm going to get started, just because I know a lot of people probably will watch this recorded. So we ended off last week on a good note with Friday on NFP. I thought that was a really good day. Really good price action. I felt good about the stream, felt good about explanation behind everything. So, yeah, Mantis, unfortunately, it's not my initials or CJTRADES, and it doesn't even show up on camera really well. But we have a packed schedule this week. Tomorrow we have no news event drivers. Tuesday we have core PPI. Then Wednesday we have CPI. Thursday we have core retail sales. Then Friday we don't have anything. So tomorrow, what would you anticipate? Well, tomorrow I'd be anticipating a lower probability, smaller range. My focus would be on Tuesday, Wednesday, Thursday. Those would be my focuses for the week. CPI can be complicated, meaning Tuesday price can be complicated, even tomorrow as well, because it can engineer liquidity. We can not really move in a certain direction or just stay stagnant, so you have to be aware of that. Leading up to any major news event drivers, you're going to have situations where price is engineering liquidity. So the day before major news event drivers, just be aware of that if you're trying to trade it. But after CPI, I think it should be fine the rest of the week. Friday, I don't really have too much intentions on trading as well. Of course, I'll still be live streaming. I'll still be here, but as far as trading it, if I had to put emphasis on it, I wouldn't because of no news event drivers. And I think Tuesday, Wednesday, and Thursday, we should be able to clean up pretty fine, to be honest with you. So that's the news event drivers for this week. So before I even go to NQ and a weekly forecast, remember what we were looking at last week. And if you go back to last week's weekly forecast, everything played out to basically perfection. And that's due to preparation. If you're not going into the week with preparation and an idea and at least a roadmap as far as what you should be looking at, then you're really just trading very blindly. So if you take a look at dollar index is opposite to whatever NQ is doing majority of the time, and you'd like to see that relationship between the two. And we're seeing higher dollar the last several weeks, couple months here since really elections. On the weekly time frame, we have this buy side imbalance, which is resting here, and we've expanded away from this, which is also a breaker to the left of you. If you spot that, if you're studious enough, that's a breaker in here. So all of those up close candles would be your bullish breaker. We've dropped down into that bullish breaker plus this inefficiency. We've moved away from that, and we moved up higher into this sell side imbalance, which is opposing over here. If I was to look at like a monthly time frame, I think dollar may reach towards this high that we haven't tagged since 2022, really. So if we continuously keep pressing higher and keep having a higher dollar, then we can keep looking at NQ as a potential lower price magnet, really. So so far so good. If we get above this imbalance, then it would be very certain. Right now, we can still react off of this and still push lower. But if we close above that and this turns into an inversion, then we can really be certain that price would want to seek this high up here. For now, I have to remain semi-realistic and say, look, this still could move away from this premium sell-side imbalance from this dealing range high down to this low. We're inside of a premium. So price could move away from it, but I'm not really on that side right now. So we're going to keep on that idea. Let's go over to bonds and futures, or bonds and yields, not futures. Bonds are moving lower, which is good. So if bonds are moving lower, you want to see NQ, ES, YM, those three start moving lower as well. And they're in the correlation, or at least the relationship of whatever dollar index is doing. It's doing the opposite of it. So these have been moving lower. I think we could potentially seek out this low on bonds here. So anytime I'm looking at bonds or yields, I'm just looking at it as a higher time frame macro and confluence and just seeing the relationships, how they're moving. I'm not going into great detail and trying to mark everything up. You can if you want, but I'm looking at the recent weeks and months and how it's moving. So if we go over to yields, what are yields doing? Yields are pressing higher, right? So we have the 10-year here where we're pressing higher. That's in correlation with dollar index, which is good. You want to see yields and dollar together. You want to see bonds and index futures moving together. And you also want to see them moving oppositely of each other. So bonds and yields, you want to see opposite. You want to see index futures and dollar index opposite. So once you get that and you see that relationship between them, that's a good sign to look at a lower dollar index and just flip the relationships and the correlations the other way if you want to look for higher prices. So if we look at another thing, which would be foreign exchange, anything with USD correlated. So we have Euro USD is moving lower, so that's good. It's moving oppositely of whatever dollar index is doing, and if this is moving lower, we want to see NQ moving lower. And we see the same thing on Euro. Euro is reaching into its buy side imbalance on the weekly time frame, which is here, discounted down here. Much like on dollar index, we're reaching into a premium sell side imbalance up here. So they're just opposite of each other. Look at GU, pound dollar, moving lower here. Looks like we want to seek some sell side liquidity underneath us. That's good. We see AU moving lower, Aussie dollar, New Zealand dollar moving lower. So what is this telling us? Right? All this is telling us that I should be looking at a lower NQ. If you go back to the weekly forecast last week, this was such a good example of predicting really a weekly time frame order flow switch before it happens. Because before this week unfolded last week, it was still, when you look at the weekly time frame, a little unclear as far as certainty-wise that we were really going to see these lower prices. But all of these things were tipping the hat. Hey, this potentially may look like we're going to see lower prices this week. And then the lower time frames are always printing order flow first. So when you're seeing the hourly chart, the 4 hour, the daily, those starting to break down, those are coming into the feed first. So you're seeing that happen. And that's why we were looking at the daily time frame last week saying, okay, well, I'm expecting lower prices out of this. And I'm expecting this because we've broken down, we came up into a premium, reacted off of this premium imbalance, this premium order block. We dropped lower, made a new low. Last week we were stating how this would be the last point of interest, the sell side imbalance, which is inside of a premium. And then combining the intermarket relationships, combining the SMT on the higher time frame, which is bearish with the ES and NQ. That's a recipe when people talk about narrative, or you hear narrative, you hear bias, you hear these things. This is what's so important. When you only get focused on a model, when you only get focused on fair value gaps, when you only get focused on a 1 minute chart, you lose sight of all of this. You lose sight of it all. And it becomes very difficult to trade because you're trying to just trade blindly, really. You have no framework to a trade. You don't know why price is going somewhere. You're just hoping that it works and hoping that, well, you know, I had a rate on sell side or I had a rate on buy side and I had the shift to market structure and I had the fair value gap like the 2022 model says. Why didn't it work? Well, if you're not paying attention to these things, then you're obviously doing something, to me, you're not doing the full preparation of work. Or maybe you're just unaware of it, and that's okay. But if you're aware of these things, you're just not doing the preparation. I mean, it takes 5-10 minutes. Like, if you could just look at these things like I just did, do the preparation, see what it's doing, have your game plan for the week. I mean, it's pretty easy to me. And then you're reading the higher time frame, and you're being in sync with it. So hopefully it makes sense. And the fact that now, on the weekly time frame, that we've dropped beneath, if you get rid of everything else so it doesn't become cluttered, just this buy side amount. See how we didn't close beneath it the last 3 weeks here, and then last week we snapped lower, closed beneath it. What does that tell you if this is a 1 minute chart or a 5 minute chart or 15 minute chart? If you were to look at that, you know, if you can't read the higher time frame, just think of this as a 1 minute chart. You would be reading it and saying, well, that's not a good sign. You're saying, well, now it's switching order flow, right? But before that, it's hard to determine that's going to do that. But how were we able to determine that this was going to snap beneath it, close beneath it? All the things I just listed was already telling us to expect that going into the week. So, again, if you were to look at this down close candle as well, which is technically a propulsion block, which is an order block in simpler terms, what did we do in here as well? We closed beneath what? The mean threshold of that. And if I get the dotted line out here, I'll have to figure out. I want to actually make that a dotted line, or a solid line, not dotted, right there. So we closed beneath the mean threshold of that, which is telling you what? If you're trading order blocks, breakers, mitigation, then if you close beneath the mean threshold, which is the 50% of them, if you close beneath them, that's telling you it's not willing to move away from it. It's not a good sign. So even though we didn't fully close beneath it, I'm not looking at that saying, well, this should support price going higher. No. To me, it's failed, and we're going to really start seeking lower prices. So I'm pretty darn confident going into the week, we're going to start seeing lower prices. Maybe not right away. We may want to set the high of the week first. You have to remember that as well. When you go into a fresh week, go back to the core content. There's weekly templates. So if you're expecting, let's say, lower prices this week, then you want to see the high of the week formed on a Tuesday or potentially a Wednesday. It can form on a Monday, but why would you want the high set first? Because in terms of power of three, right? Power of three is open, high, low, close, right? If you're looking at that and you're looking at a weekly time frame candlestick, then you're expecting this to open like we did, and you want to see the high, right? If this is the open where we open, even though we're trading lower currently, you want to see the high set first, like we did last week. Open, set the high, drop lower, set the low of the week, then we close. So if I'm expecting lower prices, then I want to see a high be set first, particularly Monday, Tuesday, or Wednesday. Looking at the economic calendar, probably Wednesday with CPI. Potentially, may happen before CPI. So by then I should start seeing and expecting lower prices start rolling out lower, and then we close out the week wherever we close out, right? Does that make sense? That's, when you go into a week, weekly forecast, the name's in it, weekly forecast. I'm looking at a weekly chart because I'm trying to predict what the weekly template is going to do. By chance, do you remember what month of core content that is? I don't. To be honest, I don't. If somebody in the chat knows, I could help them out. I appreciate it. So hopefully it makes sense. I go into every single week like that, and I expect, at least try to anticipate it. It doesn't, you're never 100% perfect, but that's at least you're trying. You're trying to at least anticipate something, rather than just going into the week blindly. The other PD array that I have as far as bullish. Why would I be marking up bullish PD arrays? Because I want to see it start really trading through these to really start trusting these lower prices, right? This is an inversion fair value gap to the left of us. Since we've already broken this buy-side imbalance, and since we've already closed beneath the mean threshold of this order block, I'm really going to be expecting price to really trade through this inversion. The other one that I can really look at would be this order block here. But since we've already traded off of this and utilized it, and we've already broken these up here, I don't really see that as an array or an area of interest that I'm really looking at saying, well, I'm expecting a bullish reaction off of. No, I'm just watching it or marking it up to see how we trade through it. That's it. So hopefully it makes sense. Same thing with the inversion. So let's get into the daily time frame. The daily time frame in here. Some beautiful price action. So this sell side liquidity pool, which is resting here, that's the nearest sell side liquidity pool compared to this low. Here is the nearest sell side liquidity pool. So I'm aiming at that liquidity pool. I would also be looking at this buy side imbalance. Since we're inside of it, I'm also going to be having that on the chart as well, just so I have an idea as far as where we're at. We're inside of that buy side imbalance, right? But I'm expecting us to trade through that. It's just an area of interest that I'll have marked up just so I know it's there. There's also another sell side liquidity pool. If I get underneath this low, there's a small little inefficiency there, but I don't expect that, or at least in real time, to give me too much of a difficulty. I think we probably want to trade to this low very aggressively. And if you look at all of these lows right here, they're all relatively equal, right? So this is a huge area of interest that I've had kind of on my mind for a while now. I think that we'll want to trade to. So going back to the weekly template I was just talking about as far as expecting the high of the week and where that could form. Well, since we've dropped and we made a new low in here, that can give price the ability to work back inside of a short-term premium. So much like last week, how we made a new low in here, that gave price the allowance to move back into a short-term premium. So from that dealing range high to this low, price moved back into a short-term premium. So anytime you make a new low, this goes for any time frame, it can give price the allowance to move back into its short-term premium. So from that dealing range high down to this low, equilibrium sitting right here. If we keep pressing lower and price keeps moving further and doesn't show any willingness to have any sort of retracement, then what it's showing you is that it really wants to spool towards sell side liquidity. Now, CJ, well, how do I know when to trust that and how do I know that? That's just experience. I mean, you can look at higher time frame and show that if it's coming from another higher time frame, like a weekly time frame fair value gap or a monthly time frame fair value gap, that just goes into a situational approach where you have to kind of determine that. If it's not showing you any sort of retracement, then just go with the flow and say, okay, well, obviously it's not willing to go back into the short-term premium. It doesn't have to do that. It can. That's why I'm saying the word, emphasizing allowance. It can be allowed to. Doesn't have to. Can be allowed to. So if we were to set the high of the week, where would I expect that? Well, I mean, we do have these two singular up close candles are your bearish order block. If you singled out, if it got up inside of that deep premium, then it would be this singular. So we'll see how that reacts this week. As far as where the high of the week is going to be set, I don't know. I don't know where that's going to be set. I have no idea. I don't know if Monday or Sunday right now it could just drop off the face of the earth. I have no idea. But that's my expectation, right? You go into the week with expectation. If things change to your playbook and what you had in your mind, then just adjust accordingly and adjust it and move on. And that's something you have to do in real time. We do this on lower time frames. I did this on Friday, where you have to adjust your playbook. You have an idea. You have a play drawn up for the week or for that little time period, whatever you're trading the silver bullet, the macro. You have a playbook. Okay, I think price is going to go here. It's going to do this. Something changes, right? Flips. Okay. Well, now I have to see with evidence that my play is no longer valid. I have to now switch to another play and see if that's going to play out. If nothing's there, then obviously don't force it. That's where you're going to make mistakes. So since we've gotten underneath this low, we'll see how we trade, right? We're going to see how we trade underneath this low, whether we want to just keep seeking lower prices or whether we want some type of short-term retracement off of that. There is a great deal of buy-side liquidity that is above us, so just be aware of that. So a lot of these highs are relatively equal from last week. I mean, if you really want to get technical, right there, right there, those are clean, relatively equal highs there, and same right there, that buy-side liquidity pool there. So we'll see how we trade, whether or not we're going to want to seek that. So I saw you last week, Bias, when you said it's going lower. Very impressed. Thank you. I appreciate it. And again, I mean, I don't put a whole bunch of emphasis on being right in terms of an analysis. I mean, you can be right on your analysis but still lose the trade or still have a losing week. I mean, you know, it's cool to see it play out, but if, you know, executing is the most important. Executing and managing the correct things that's what's important. So, of course, they both go hand in hand. If you're able to execute correctly and you have the right, you know, preparation and the right analysis, I mean, that's, you know, that's perfect. But new week opening gap here. Make note of that. It's decently sized, so we can definitely utilize that this week. As far as last week, didn't end up taking out the lows in here, and if you take a look at ES made a lower low in here, so we had the S&T divergence. Price got sucked back into the weekly range. Pretty typical TJF retracement, especially as we're unfolding lower. We're coming into the PM session. You could probably expect some type of retracement, right? Let's look at, last but not least, is kind of like the cherry on top of everything for a weekly forecast, right? You want to look at the S&T between, I only look at ES and I only look at NQ together as far as the S&T divergence. And this is something where, again, as far as tipping the hand, if you want to see a change before the change really happens, right? The change in order flow before it happens, S&T is a huge help. Looking into market relation is a huge help. You have these things, right, that really are in your arsenal to help you. So I'll probably put these up side by side. That way we can get a better view of it together. The daily time frame here. Oops, let me delete that. Let's just go out to the daily time frame and the weekly time frame. Now, people ask me about S&T divergence. I'm looking at a higher time frame because if I'm looking again at a weekly forecast and a weekly, you know, idea, then I want to be looking at the S&T there and say, okay, well, what is it telling me? So I think I pointed this out last week. I know I did. In here, and I think it'll be a little bit easier on the weekly time frame probably to see it. Why don't I consider Dow? Because Dow is, I can give you a lot of reasons. A, I used Dow for a while, and it gave me a lot of complications. It's like the sixth sister between the two that just is always doing something different. I personally asked ICT within the charter member group, you know, he was not using YM one day, and I said, well, why aren't you using that? And he said, don't consider it as far as intraday wise. He said, most of the time, if I use it, it's going to be in the higher time frame, but I don't give it that much emphasis. So ever since I stopped doing that, it's just been a huge relief and help, because most of the time it's either decoupled, it's doing something different. If you look at the order flow between ES and NQ and YM, they're doing something completely different. So if anything, it's only been a positive change. So I recommend it. I know ICT and some of his mentorships have said to look at the, you know, YM as well, but I've asked him personally and he told me his answer. So anyways, and here this is the S&P I was pointing out last week where NQ was making the higher high on Monday, December 16th. And if you look at Monday, December 16th here, what is ES doing? ES is printing a lower high while NQ is printing a higher high, right? So it's starting to tell you the tip of the hat, right? Let's look at the lower time frames here. And somebody asked me this question last week again, and this is where you have to take S&T with a grain of salt. It's utilized as a confluence. It's utilized as like, the reason I go over S&T last. Notice what I do as far as my steps and the way I go through things is I don't look at S&T first. I look at dollar index first, and then I look at bonds, then I look at yields, then I look at foreign exchange, and then I look at NQ, then I look at S&T, because S&T is the last thing or piece of the puzzle. Because if I don't have anything else, then I'm just looking at S&T as S&T. It's just a confluence. Somebody asked me last week, you know, why I was so heavily biased on bearish prices when ES failed to make a lower low and NQ made a lower low. He's like, well, there's a bullish divergence. Why are you not expecting higher prices? Just because you have a divergence, that doesn't mean that you're going to, see that happen. And even if one failed to make the lower low or whatever it may be, that just means that either it just generated liquidity. It's not a big deal. The most important part is look at the narrative and the order flow and what you should be expecting first, and then throwing the SMT in there. I see people trip up over SMT a lot. I did as well. I'm not going to say I don't or didn't, but you have to understand it's just a confluence, and it's something that's like the last piece of the puzzle. Even intraday wise, when I'm looking at a 1 minute chart, 15-second chart, or whatever it may be, I'm looking at the S&P as the last, or let me state this. It may be the last piece of the puzzle, but it may be the first signal to something, and then I have to watch things pan out, right? So, same thing. If you're going to be trading NQ, then you want to be looking at ES the same and saying, well, where is its related liquidity pools? And if I have the same bias on NQ, can I see that same narrative play out in ES similarly? And if we look at ES, what sticks out like a sore thumb? These relative equal lows stick out like a sore thumb. They jump off the screen. If you've been trading these concepts, it's pretty darn easy to look at that and say, well, yeah, ES probably wants to trade to that. Everything that we've discussed and considered, that looks pretty darn easy, right? If we look at NQ, same thing. I mean, even though we don't have relative equal lows right here, they're resting right about in here, right? They're resting a little bit lower, and that's basically showing that NQ will end up being the weaker one. So, I'm sorry, ES actually will be the weaker one because it's underneath. If you look at this low where my crosshair is on NQ, NQ is above Tuesday, November 19th's low, and ES is beneath it. So ES is actually the weaker one. So that's how, if you're looking at weakness and strengths. So I think that's going to be it. Hopefully that was a good explanation. Hopefully you guys enjoyed that. Ali, I appreciate you. I think that's going to be it till tomorrow morning. D, you need a Discord. That'll be later, a couple months, a few months from now. I'll same thing as last year, but follow me. But for now, we're just going to keep it public. So until tomorrow, hope you guys enjoy your night. Peace out.